What's going on, guys? Jared here. This is Run with Tobe. We are on episode 13. Let's go ahead and get right into it. All right, so what's going on, Andrew? Lucky number 13. Here we are.
Damn straight. And we just passed Friday the 13th.
Oh, yeah.
That's
was
a
the other day.
coincidence.
Yeah.
But yeah, man, we're rolling.
Let's go ahead and jump right into what has caught your attention lately.
Yeah, so I for all my friends out there, they all know I'm a huge Roger Federer fan, and even more so of late. So now that he's got 20 Grand Slams and he's
Holy crap.
36 years old now.
He's like one every 2 years, basically.
Yeah. So, well,
Right.
there was a stretch between like 2012 and like 2015 where he was like Grand Slam winless.
Was that
And then-
injury or?
So he was just being outplayed
Got
by
it. Okay.
the younger cats like Djokovic and
Yep.
Nadal, and he kind of reinvented himself a little bit, switched to like a bigger racket and like did all these things, which most
more forearm workouts.
yeah, exactly. And the one thing about his career is that he's never really been injured, but he injured himself and took like 6 months off, I think in 2016. And since then he's won, I want to say 4 slams
Wow.
over the span of 2 years. Won the 3 slams, won the Australian twice and won Wimbledon once. But anyways, the reason I bring it up was because the ad that I saw, it's actually not a new ad. It's only been around for about a year. And it's called the Roger Effect. And it's, of course, by Nike, who has a lifetime sort of sponsorship deal with him, kind of like they would do with LeBron or
Right.
Jordan or any of the
Katie. any of these
yeah,
guys,
exactly. And so the whole idea is that the whole commercial is basically him playing tennis. He's like serving and, it's kind of the crowd watching him. And as the match kind of goes on, the crowd starts taking off their clothes, but they're not getting naked. They're actually sporting Nike tennis gear underneath. And
That's a lot of t-shirts.
yeah, exactly. So the idea is like as the match goes on and on, they get more anxious to like leave the stadium where he's playing, which is kind of weird because like you would imagine they want to stay there to watch the
Right,
match.
to watch the end of the match.
And on match point, Roger is about to serve and he kind of fakes everyone out and they kind of make this like bum rush for the exits. And I was kind of like thrown off by this. And he ends up serving, wins the match. And as soon as they say game, set, match, everyone just bum rushes the exits. And they basically go out and they find the nearest tennis court that they can get on to start playing. And I thought this was an awesome
So they're
commercial.
inspired.
Yeah, dude. How many times have you watched that movie or maybe
Totally.
saw a live game
Yeah.
or something like that?
Karate Kid.
Yeah,
right?
exactly. Actually,
We talked about
Karate
that.
Kid was the entire reason why I got into Taekwondo in the first place.
Exactly, right?
So
I didn't go that far, but I was trying to I was trying to break boards in the house. For sure.
That's pretty interesting. Were you successful?
No, absolutely not. No.
Did you break your hand?
I did not. No, but I did have a couple bruises.
Got it.
It was bad. And then I took up skateboarding. I was like, forget this. I'm going into skateboarding.
Got it. So, I mean, that's cool because we can all kind of relate to that time where
totally.
you regardless if it's sports or whatever the case was, where you got inspired,
Yep.
kind of the spur of the moment.
That's kind of how I got into basketball.
Interesting. Okay.
Yep.
Watching a Michael Jordan commercial back in the day.
Actually, it wasn't Jordan. It was I was this is ironic and kind of funny. I was really big into Shaq when I was a kid.
Yep.
Around that age is when Shaq.
Florida, man.
Yeah, because I grew up in Florida. When Shaq got drafted to the Magic, I was
Yep.
really big into Shaquille O'Neal. In fact, my bar mitzvah was Orlando Magic themed, and I
That's
had
amazing.
a giant
That's awesome.
7-foot Shaq cutout there. It's funny. I
That's
can't
awesome.
find any pictures or video. I don't know where it's buried, but yeah, if I ever do find them, I'll share them. But I was really into. Yeah, I watched Shaq play, and I was like, I gotta learn how to play basketball. And
Yeah.
then I realized that I was probably never going to be that big. And then I was like, okay, well, maybe I'll move into Penny Hardaway because I can get to that.
I was just gonna say, dude, or you probably were also inspired by Penny too.
Yeah,
right?
yeah, absolutely.
Now that I think about it, Penny was kind of like the Steph Curry back in.
He was, man.
Back in the
Penny
day,
was.
right?
He was supposed to be the next Jordan, but
That's
then he
yeah.
got riddled with injuries.
Yep,
and this
yep,
and that. Yeah, and then Shaq left Orlando. Anyway,
So this commercial was cool because now that I think about it, there wasn't a single word said in this entire commercial.
oh really?
And it's just now thinking back on it, it's a really good example.
Besides game set match.
Yeah, I guess besides game set match, that's right. But there's no narration or anything like that. And this is it. It was just really solid storytelling, visual storytelling, basically.
Nice.
Because when I first saw it, I was like, what the heck are they going towards? And, you know, at the very last part where you see everyone getting on the tennis court playing this and that, like, oh, I get it. I felt that way before too.
Right.
You know?
Yep.
So it evokes some emotion, you know, that kind of stuff. So,
or it made you want to go out and buy the newest gear.
Not going to lie, I actually looked up to see like what Federer's kit would look like, because at every Grand Slam, they have these things that are called kits. And so they're just different colorways of like every Grand Slam, they have like a new Federer like outfit. Basically.
Right. Yeah, because they don't have team uniforms. So
exactly. So they do one for Nadal and all their top players, but for Federer, they make a very specific one with his brand and whatnot. But I did jump on the Nike website after that. So you got me. Or they got me. I didn't buy anything, but you know, it's definitely planted in the back of my mind.
Yeah, but they got you to the website.
Yep.
That's
exactly.
half the battle.
Exactly. From YouTube, from the YouTube page to the website.
Or from TV, or is that where you saw it first? TV?
No, I saw it on YouTube.
Oh, you saw it on YouTube?
It was on Nike's YouTube channel.
Oh, interesting. Okay.
Yeah. But yeah, dude, so that was me. What about you? What you got?
Mine is a little bit related to the topic we're going to dive into in the main part of the podcast. But this one, it got me because it was hilarious. Geico does it again. I mean, we all know about the
always, yeah.
Right, the gecko to the cavemen to, you know, whatever else. Their latest kick is like all these different like ironic situations, and whatever it is, it's not as cool as saving money on Geico, right? No matter how ironic the situation is. This one's called karate therapy, and it's basically this guy outside, and he's chopping wood with his hands, and his whole thing is, I need to save money because we're moving, we got to get homeowners insurance, and his neighbor rolls up on one of those adult tricycles, which is ridiculous to begin with.
And wait, I'm just trying to visualize an adult tricycle.
It's literally one. You remember those like big wheel tricycles when you were a kid?
The red one,
the 80s
kids.
Yeah. It's one of those, but it's for adults. No handlebars, because it's all about steering with your legs, or maybe a couple levers, something like that.
Yeah.
But his neighbor rolls up and he's like, well, you know, you can save money on your homeowner's insurance through Geico. And it cuts, and the guy who's chopping these blocks of wood with his hands, doing quote unquote karate therapy, runs head first into him, and his wife both run head first or body first through their walls of the side of their house. And they're like, we got to save money on Geico. And they're just like going, and then the commercial cuts, and that's pretty much it. But it's hilarious. And, the reason why I picked it mainly today was just because it kind of leads into our main topic, but it's also Geico just doing what they do best. And that's
it's like
storytelling.
A quote unquote boring like thing, like
insurance,
saving money on your auto insurance, right, and, you know, making it fun. And how long have these campaigns? I want to say they've been going on for 5, maybe.
Oh yeah, I mean, I think it started with the caveman back in the day, right? It was the caveman, maybe the gecko was first, because it was like everybody pronounced it like gecko. Yeah, so it was Geico the gecko, that kind of thing. But yeah, I mean, it's been going on for a long. I would say probably 10 years. I want to say it's safe to say 10.
Yeah, that's right.
But yeah, I mean, they just do amazing storytelling. They're creative. Obviously, they're going through creative agencies and, you know, different ad agencies, but it's always really good. We'll put the links in the show notes for both these commercials, guys. Definitely check them out. And you could actually just hit play all on Geico and watch all their different ads, and it's amazing. Each one is hilarious in its own right. So definitely check those out.
Always quality stuff from them, man. And it's those are actually the commercials that when you see a Geico one or new one come up, you're like, all right, what do they got for us this time?
Yeah, and I love it because they're doing it year round. They're not trying to just go for the Super Bowl ad or the Christmas ad or, you know, whatever holiday season ad. They're doing it all year round. So props to them for, you know, keeping up and being on the cutting edge of all that.
Yeah, for sure.
Cool. Let's go ahead and jump into the next section. So what piece of software, app, or new tool have you been using lately?
Yeah, so lately I've been, you know, pretty busy, and one of the most annoying things is when someone emails you and they want to set up a time to talk. You're like, oh, I'm free Tuesday after 3 p.m. I'm free between 10 and 12 or 10 a.m. and 12 p.m. on Wednesday. And if those times don't work, well, let me know some times that do, and I'm trying to find it. When you're really busy, that takes up a lot of effing time. Man.
It's not even the time, but sometimes you're just looking at your calendar and you're like, trying to figure out.
Yep.
You see all these different colors and bars and dots, and you're like, wait a minute, when am I open? And then I've done it personally. I've double booked myself. I know I've double booked you, I'm sure.
Yeah.
So you've been using an app to kind of control this?
Yeah. So internally, like, we use the whole Google suite. So like you can see my calendar, everyone can see my calendar, and internally it's easy for us to figure out when I'm available. But externally, when, there's a lead or a prospective customer or whatever, if they're interested and they want to talk to me, what I'll do is I actually use this app called Calendly. It's spelled Calendly.
Dropping more vowels as you.
Yeah, exactly. I'm like trying to sound it all out. All these like LYs and all these businesses with LYs at the end. In any case, it's a free tool.
It's free.
Yeah, it's free. So it allows you to link up your Google Calendar or whatever calendar you use. And it's a super simple interface. You send someone a link. There's a lot of other companies that do this out there, but you send someone a link and you can either allow them to book a 15, 30-minute or 1-hour meeting. And because it syncs with your calendar, it just shows them only the available slots. So 11 a.m., 1 p.m., whatever on a specific date. It saved me a lot of time. And quite frankly, like it's an awesome tool that's just super simple. And I think the premium version allows you to sync multiple calendars with your account. So I know a lot of us have our own personal calendars.
Right. Sometimes we have two
two different calendars, whether it's for work or if you share something and you want to block that time out. I think the premium version allows you to integrate like more than one calendar. It's got some pretty cool automation features. So for example, if you use Zoom or Ring Central or any one of those like video conferencing apps, you can put that link to your Zoom
or
video
whatever. Chat link.
Yeah, exactly. Right in there so that you don't have to do anything prior to the meeting. But I think
there's nothing worse than getting to a meeting and someone's like, okay, what's the link?
Yeah. Or am I calling you or whatever, so
guilty.
For me, that's been like a pretty useful tool, especially as, minutes, get more valuable and more precious, throughout the day. So for anyone out there, Calendly will link up like we always do. We'll link up the notes, or we'll put all the links in the show notes and whatnot. So what about you?
Mine is definitely not as productive. It's actually probably taking away from my production, but nonetheless, it is very impressive. ESPN, if anybody out there knows or uses the ESPN app, they have recently updated their app. They did a full refresh of the app. And now it includes this thing called ESPN Plus, which is their paid subscription version of ESPN. So currently you can opt in to watch live streaming sports and different shows on ESPN through your cable provider. So if you subscribe to like Spectrum Cable, DirecTV, whatever it is, you can just sign in with your login and you get access to a lot of their content. Again, live streaming and stuff like that. Now they've taken it a step further. Now for $4.99, you get even more exclusive ESPN content only. So things like the 30 for 30 documentaries that do. Yeah. Kobe has a new documentary series that's coming out on it. I'm sure other athletes are building tons of other, I guess it's like their version of what Netflix and Hulu and all these other OTT networks are doing. Disney's coming hard and they're like, well, we have all this great content. Here's another $4.99 subscription that we can, make a revenue stream out of. But it's amazing. It's just going to show what the cable networks and the, these bigger quote unquote, traditional cable companies are
conglomerates, man.
Yeah, exactly.
Yeah, exactly.
So, I mean, we're literally steps away from everything being OTT streaming. And,
for sure.
Just coming right to your device.
It's fascinating because, first of all, I hate the cable providers. Like back in the, not even back in the day, like maybe a couple of years ago. I remember like you had to pay for the middle tier cable subscription to get ESPN.
Yep.
So I think like there was a $39.99 tier and you got some basic cable and stuff like History
what they
Channel.
used to do with HBO and stuff before back in the day. Yep.
But now I noticed that ESPN is actually down on the lower tier now.
Yep.
But it's interesting because these cable companies, man, like they've monopolized everything for so long and they had all of the conduits to the customer.
Right.
Because the only way you could have gotten that content, TV content, right, was straight through your cable provider.
Right.
But now there's a one-to-one relationship with the media company that's producing the content with the customer, right? And I think a lot of the cable companies are kind of on their heels right now. So I think I saw Spectrum or Time Warner or whatever they call themselves. They have a $19.99 a month package, which allows you to stream through Apple TV. It basically gives you like the basic cable via Apple TV, via apps,
right?
iPhone, Android.
DirecTV is doing that with DirecTV now. So I think it solves a couple problems. One, not everybody can install a satellite dish if you live, especially here in like the LA area. If you live in an apartment, it's not always feasible. So you can get those customers now on DirecTV. And two, it's for people like me. I don't want 250,000 channels.
Exactly.
And here's the thing. The cable companies don't understand. The people that don't want to pay the money are never going to pay the money no matter what platform it sits on or what device it sits on. I'm willing to pay. I just don't want to pay for like 800 channels that I don't care about. Yeah, do you know what I'm saying?
It always blew my mind. It's like, why? Like, no, actually, it doesn't. No, I'm actually saying that out. It doesn't blow my mind. But I always wondered, like, why can't you pick and choose what channels you want?
Well, infrastructure back end, I think that would be a nightmare. Now technology is probably there, but back in the day, no way.
But I don't even think that was a driver. I was like, well, you have no choice.
Well, yeah, that too.
You have one cable provider.
That's like buying a car, right?
Yeah,
you get package A, B, or C, depending on what tier you're on, is how much you're going to pay. You don't get to pick.
Yeah. But obviously the power again, the internet has changed everything.
Sure.
We just did a webinar the other day, and a point that I was trying to make when it comes to content marketing is that the internet has just changed the way we do marketing.
Everything.
It's just changed everything because it gives more power to the consumer. It gives more power for the consumer to have the ability to pick and choose what content they want. And I think we never really understand these sort of like structural changes until they actually start happening. But this $4.99 ESPN app is the exact example of that, man. If you want it, you'll pay for it.
Yeah, exactly. That's what I'm saying. Like,
you'll pay $4.99 for it too, which, and look, we always talk about being like $4.99, $9.99 to death, right? But you get to pick and choose what you want. Right.
There was a study, or not, I don't want to say a study, but an article that came out, and I don't remember the publication. I could see if I can dig it up. Basically saying that in, 5 years from now, everybody that's trying to cut the cords from pricing, you're going to be right back into that you're going to spend the same amount of money, $120, $160 a month for cable, but it's just going to be over all these different networks. As soon as they flip the switch and they move away from the traditional cable company, business model, and they move more to this like OTT style business model, sure, they're going to start charging $39, $49 per month for those subscriptions. But as long as you get to pick and choose, like that's where the consumer wins, right? Again, I don't care about paying. I'm down to pay because I like the content. I just don't want to pay for like
stuff you don't
30 channels from like Discovery Channel, like or National Geographic. I just want the one. I don't want the other 12 that come with it.
Not to get into like too much into politics now, but we just got through this whole net neutrality thing.
Right.
And it's effing nuts that like not having net neutrality in place anymore, where they can potentially throttle your bandwidth depending on what kind of content you're consuming or charge you tiers to consume certain content on the internet. That's a scary thing. It is. And it's almost going back to that mall. And you can tell, like, dude, there's so many how many lobbyists work for all those major conglomerates that are pushing that. Do you know what I'm saying?
Yeah, it's taken out of their pockets. That's why they're
exactly. So it's a dollars game, but I think, and I think right now they're still kind of going through like how to finalize the decision.
Roll it out, basically.
I don't know what I don't actually think it's been fully approved yet. There's still some things it has to go through. Some hoops they have to jump through to get that whole or to get rid of net neutrality. But yeah, it's a scary thing, man. But it always comes down to dollars and cents. Yeah. Right.
Well, I mean, the thing I always think about too is that'll happen, but then something else will happen and even it out, and it always ends up evening out at some point.
Yeah. Progress is never a linear.
No,
it's never
it's
linear.
Not. It's
right?
not, and it's not. It's never in one favor or the other for too long.
For sure.
Yeah. So anyway, going back to, so it's really cool. Disney has already talked about rolling out a Disney premium content app. Sometime in 2018, 2019, something like that, where it's all the Disney, the old catalog of movies, all their content that you can subscribe to. And this is probably just the beginning of them, starting to really kind of grab the reins and take control of OTT in your phone, basically.
For everyone who wants to watch ESPN on their phone while at work to kill time or whatever, right?
Yeah. But one thing I did want to ask you, and this is something I often think about quite a bit. So there's this thing, and I think you actually told me you were either going to do it or you did do it, and that's the Movie Pass, where you can buy the subscription Movie Pass thing.
Yep.
I love to go to the movies. My wife, unfortunately, does not. She thinks it's overpriced. She's like, I'll just wait for it to come out on DVD or streaming,
which is
or
like
whatever.
in a month now, which is
right.
insane,
Which the turnaround
right?
is way quicker than it used to be, right? I mean, obviously they still hold us to like things like Star Wars, and Avengers is probably going to be held forever.
Yep.
And now with the baby, I kind of have to side with her because we can't always take the baby out or find a babysitter. Sure. So my question to you is, how much would you be willing to pay to get the latest movies that are coming out in the movie theater, whatever movie coming out this weekend, or we'll say the Avengers, right? That comes out in like 2 weeks, I think. How much would you be willing to pay to stream that the night it comes out in your living room?
It's a good question. The number that just immediately came to my mind was $20.
$20. Okay.
Yeah. So I think $20.
You think that stops? So like,
because the reason I think actually I say that is like when I actually rent movies on Amazon or iTunes or whatever. Yeah. And I think that
it's like
$4 to $6 to rent each one.
Oh, right. You get the 48 hours.
Yeah, exactly. But not to buy it, but to rent it. It's like for 48 hours, it's like $4 to $6. So like one movie a week, right?
Yep.
About $20 a month. So, and to not drop like $30 on
just
popcorn
get
and
in the
drink
car, have to go. I mean, you do lose out in the experience, right? You're not going to get the giant screen, the
I don't
speakers.
care that much. Honestly, I don't. Unless it's some crazy movie, like maybe it's like a Star Wars kind of movie. Then maybe
Avengers. That's why I'm saying Avengers.
Yeah. No, I even that I actually prefer to watch it in my own.
Interesting.
house.
Okay.
Yeah. I
kind of pause it when you want to go.
Yeah. Like I think the last movie I went to, it was just one of those experiences where someone's always kicking the back of your seat.
Oh yeah.
Like the temperature wasn't right.
Right.
Like I don't know. I like being in the cup. Maybe I'm just getting older now and don't want to leave the damn house. But what about you? How much would you be willing to pay?
I think I would pay like $39.99, $40.
Really?
I would pay $40. Yeah, because I figure
Holy
it's going to cost me. So it's going to cost my wife and I here in LA. We're not talking. So in Florida, it's like super cheap where my family lives. I think my dad, my brother-in-law, myself, and his dad, we all went to Star Wars for like, just for the tickets, because my dad got like military vets discount. It was like $25 for all the tickets for 4 of us.
That's amazing.
That's amazing, right? Yeah. So obviously here in LA, it's a little bit different. Prices are kind of crazy. If you go and see like IMAX or 3D or whatever, it can be like $18 a ticket, $20 a ticket, right? So I figure if it's my wife and I, and we pay $20 per ticket, that's $40 right there. Then we're going to go and buy popcorn. Then we're going to go and buy candy, drinks, whatever. It's like $100 night, easy. Plus driving there, planning the time. Maybe now we have to get a sitter, or if my mother-in-law can't do it or whatever. So like it's $150 night, easy. $40, no problem, dude. I can just sit in my living room, watch it, eat what I want.
It's funny that you bring up the Movie Pass because I
not have to drive.
I just actually saw right before we started recording this thing, I saw a post from a friend on Facebook about, hey, I just got my Movie Pass. And actually, I keep forgetting to sign up for that damn thing because every time I go to the movies, I'm like, you know what? This is like 4 months of the Movie Pass, And actually, they have pretty good theaters like the Cinemark and Playa Vista.
Yeah.
And
it's great, but again, it's having to go to the movies,
But they were saying like, I don't know how, they have like 1.5 million subscribers.
Oh wow!
And they had something happen with AMC, which was a significant portion of the theaters that are available, and a lot of the AMC theaters disappeared.
They kind of like got out of.
I don't know how that. I need to do some research. I need to figure it. And everyone out there knows how their business model works. I'd love to hear it. But do they pay some sort of like fee to the theaters? Like how does the business, like where does the $6 a month, is it $6 a month or $6 a month? Where does that subscription go to?
Right. How does that break down financially?
Or what does MoviePass do with that money to give them the ability to send their customers to those theaters? If you're at a theater, maybe you lose some revenue on the ticket dollars, but maybe you're trying to make it up in concessions.
Yeah,
or something like that.
But at the same time, like $6 a month for me, it would be way better than the once a year that I kind of try to go to the movies, once or twice a year.
The one thing I hate about that thing is that you have to get a physical card in the mail.
Oh, interesting.
So it takes like 7 days.
So there's no app or anything like that?
There is an app, but like when I tried to go through it, the app is like to order the card or something like that.
Maybe they're a little early to the game.
Yeah, you physically need a card, I think, to use it. But I just keep forgetting to sign up.
Same thing, Costco. Get rid of that card.
Yeah, no shit, right? Yeah. Well, yeah, they need an app for that or something, right?
Sam's Club, not to go too far, we're kind of way jumping off topic, but Sam's Club actually has an app that has your card in it, but you can also check out through the app, which is so that's Walmart taking a step up. But yeah, Costco, get on board. We need that app.
Yeah, those lines are too damn long on the weekends,
especially here in LA. But yeah, so I would pay $40, man, hands down. Like no problem. I'd rent a movie for $40 and be able to control the environment. That's worth the $40.
Yeah, I like the idea of being, and honestly,
I mean, people pay $100 for a fight.
Yeah, true that.
And that's like
true that.
A one-time event. So
true that. Yeah.
Yeah. Anybody else out there, if you guys have any comments about that, or thoughts, or maybe you guys see some stuff on the horizon. I mean, I think it's going to that anyway. There's going to be the model that comes out to the movie theater, but also, maybe like a week later or 2 weeks later, whatever it is, you'll be able to stream it for a premium price. I definitely think that's going to happen. But yeah, if you guys have any comments on that, please definitely hit us up, either on social, or you can email us info@Tobe Agency, or find us on social @RunWithTobe. Here at Tobe Agency, we're a full-stack marketing agency. From strategy and execution to concepting and building creative media, we can do it all. If you think you're a good fit, or we're a good fit for your company, drop us a line, info@tobeagency.co. All right, Andrew, that's going to take us into the main portion of today's podcast. And this is something that I am definitely not an expert on. This is your wheelhouse. I'm definitely going to give you the reins and let you kind of run with this. I'm sure I'll have some thoughts and some insight on it, because it does happen to do, has a lot to do with technology, which is a cool thing. But the other side of it is all about the mortgage. And I have never purchased a house. I'm not in a house that I own right now. I have no idea about it. So, man, let's jump into this topic about just where the mortgage business is going in general, and how it's taking advantage of technology and the marketing things that are happening on the horizon.
Yeah, so I guess before we even jump into that, for any of our listeners out there, the mortgage industry it's like a $1.8 trillion industry. It is the cornerstone of the U.S. economy. In fact, it's potentially also the cornerstone of the world economy as well. And I'll explain that in a little bit further. The whole 2008 financial crisis that not only had huge effects here in the U.S., but also had huge effects overseas as well, was a direct result of very poor lending practices in the mortgage market.
Irresponsibility.
Yeah, exactly. And a lot of people, I don't know if you've seen that movie, The Big Short.
Yep. I love it. I know, I don't know how to the T it is, but I love that movie. It's
right on point. I mean, that is a very good description of basically what happens in the industry. Everything from the mortgage broker in Florida who's driving a $300,000.
The guy who's selling all the houses to strippers.
Exactly.
He's got like 8 mortgages or whatever.
12 houses or whatever in Las Vegas.
In a condo.
That shit actually went down, man. And I guess before, to kind of like take a few steps back, the mortgage industry it's fascinating. It's probably one of the most boring yet fascinating things to me, because it is such a complicated, complex business. And the reason for it is that people are lending other people large sums of money.
Right.
Most people out there, they don't own their house.
Right.
The person who owns the mortgage owns their house, right? So what happens, and maybe this is a little bit of education for you as who's never purchased the house before, or anyone out there who's never purchased the house before. What happens is, let's say you find a house through a realtor, right? And then you find a loan officer. They could be a mortgage broker. And what a mortgage broker is that They basically have relationships with multiple mortgage banks. So they go out and shop different mortgage banks for you. Or you could be working with a mortgage banker. And a mortgage banker is someone who actually lends you money from themselves. A broker just basically finds you the mortgage
They're the
bank.
middleman of that.
Exactly. Right. Just like kind of insurance. And we'll talk about that in a little bit. But, when you work with a broker, you're working with someone who potentially has access to multiple different types of banks. Banks, on the other hand, they lend their own money out, but there's a slight caveat to that. They actually lend your money out. They lend you money for 30 to 60 days, and then they go around and they sell your mortgage to an investor who aggregates all of those mortgages up. They package it up into what's called a security, a mortgage-backed security, MBS, which is actually a very big investment tool that a lot of pension funds and, very big, like retirement funds,
CalPERS, investment
CalPERS,
pools.
Exactly. And what they do is these investors, they buy mortgages from mortgage banks, they pull them up, and then they go and sell those securities to somebody else. And that's called the secondary market for mortgages, right?
Which is pretty much what The Big Short kind of
exactly
like alludes to.
So all those mortgage-backed securities that were being packaged up in securities, the quality of those securities are rated by the underlying quality of the mortgages that go into that security.
Right.
So there could be thousands or hundreds of thousands of mortgages that go into that security. The quality of those mortgages that go into that security are all determined by the credit score of the borrower. There's all kinds of ratios and metrics and things like that.
The net worth and all.
The net worth. There's a thing
borrower.
called LTV, which is a loan to value ratio. The lower the LTV, the less risky the loan is because the person is putting more of their money as a down payment relative to the appraised value of the house. So there's all these crazy things that go into rating the quality of a mortgage. And the reason why it's so important to get a good quality borrower is because eventually that loan gets sold like 3 times over again down the road. And someone like Fidelity, for example, who's managing a retirement fund, they'll end up using your retirement money to invest in a mortgage-backed security. So what happened during 2008 was that all the rating agencies that were rating all the mortgage-backed securities, they weren't paying attention, and a lot of crappy mortgages. The stripper who makes maybe she makes $100,000 a year, but she has no business owning 10 different homes. People weren't putting money down on their houses. They were buying houses with literally zero money down. And if you have zero money down in the house, and for some reason you can't pay that mortgage anymore, most people are just going to say, F it. Screw my credit.
Yeah, same with the car. Like the people that let their cars get repoed.
Exactly.
Similar
right.
thing,
So that's exactly what happened back in 2008 was that there were really poor lending decisions being made. And so post 2008, there was a big kind of swing back to only providing like really high quality, like credit-worthy borrowers, who could document their income and do all these sorts of things to make sure that the quality of the loan was good and that an investor would have confidence in buying them. But the reason why the mortgage industry is so complicated is because there's so much paperwork that goes into it. And the biggest problem also is fraud in the mortgage industry. So the way that they typically verify your income, which is one of the biggest inputs in underwriting a loan means basically like looking at the quality of the loan, the quality of the borrower, and giving an approval or a denial decision based on the quality. It's kind of like applying for a credit card.
Sure.
They can
you got to hit the threshold.
Exactly. They can approve or deny you based on how they underwrote.
Right. And then your approval sits in a tier.
Exactly. So depending on, you have really good credit, maybe you have a really low interest rate because you're less risk, right? If you've got like kind of crappy credit, maybe they'll cap your total credit, they'll extend you, or they'll put the interest rate really high because you're a high risk customer, right? So mortgage is no different, but there's just a ton more documentation that has to go into it because they want to verify your income, they want to verify your employer, they want to verify your bank statements. And back in 2000 and before then, it was people were like faking a lot of these things, Right. So that's where the role of technology like kind of started to come into place. And I think the mortgage industry has always figured out a way to really find a way to streamline the mortgage process, because a mortgage is kind of like a mortgage company is kind of like a manufacturing facility. It's just literally manufacturing paper and packaging that paper up and shipping that. You're literally shipping off a loan file when the loan funds and the house goes to closing. And so one thing that a lot of mortgage companies have been trying to figure out is, how do we move towards this sort of like paperless digital mortgage? When literally like back, I remember like my first job back in the day was like, I was a copy boy for a mortgage company. And I just remember a loan file was like hundreds of pages of bank statements, like disclosures, like all this stuff. And it was all paper. Literally, like there's a company called Iron Mountain. I don't know if you've ever heard of them, but they built an empire on just storing documentation.
I was just, my next question was like, where does all this paper go?
It gets stored and archived, and that paper is almost like the collateral that says the bank, this is all the paperwork that went into approving this loan, and here's all the assets and all that kind of stuff, right? But ultimately, like as we started to move towards this kind of idea of a digital mortgage, kind of like, Quicken has been doing with taxes.
Yep.
Like before you had to enter in your W-2 information, but now Quicken just pulls it straight out.
TurboTax.
Yeah, TurboTax, like all that stuff. The digital mortgage is kind of working towards that same sort of idea where a lot of stuff becomes automated. There's less like manual paperwork.
I think it's funny that the IRS has moved quicker to getting towards that than these other companies.
But dude, just imagine just like the sheer amount of paperwork it's has to be done, you know?
Well, yeah, I think the volume of mortgage paperwork is probably tenfold of what the IRS is doing.
Yeah. And I guess the bigger picture here again is the paperless mortgage or the digital mortgage is kind of tough to do, because when you if you're a mortgage banker and you sell your loans to an investor,
right,
they want to make sure that the loan that they're buying is a good loan.
It's legit, right?
It's a legit loan, right? So they have all kinds of things called guidelines that they have for the person selling them the loan, and you have to literally meet those guidelines to a T. What happens is if you sell them a loan that they find out afterwards that it didn't meet those guidelines, they can actually make the mortgage company buy that entire loan back.
Wow. Buy it back.
Yeah. So like, let's say they lent, someone, they had a customer somewhere that bought a $400,000 condo and they lent them $300,000. That mortgage banker sells that loan to an investor. Something goes wrong with the mortgage, like the borrower misses a payment or whatever, and the investor looks through the loan file and says, well, you didn't include like page 5 of the credit report.
Right.
Buy the loan back. You literally, as a mortgage bank, have to front $400,000 to buy that loan back.
Wow.
Or $300,000 to buy that loan back. So the digital mortgage, I think, is in a way, it's a very compliance-driven industry. So the whole idea of a digital mortgage is really moving towards that idea of the paperless mortgage, which I think also helps with some of the compliance around it. So there's less like weird stuff that's going on
security
and all that kind of stuff. So that's really more on what they call the production and operation side of the mortgage business, which quite frankly is extremely complicated. But on the marketing side, which is, a big reason why, I wanted to get Tobe Agency started was, I grew up in the mortgage industry and I kind of realized that it's a very old school industry with the way that it does marketing, right? Direct mail, building referral partnerships with realtors, lunch and learns at the local chamber of commerce,
right.
Networking with the insurance agents who can send you leads. It was a very, very kind of like marketing 1.0, you know what I mean?
Yeah,
sort of way of approaching
flyers.
Yeah, like flyers,
paper handouts, whatever.
All like pounding the pavement, knocking door to door, you know what I mean, sort of thing. And I have to say, like loan officers are the like kind of the tip of the spear when it comes to sales, and mortgage companies, I would say, live and die by the quality of their loan officers. But loan officers kind of, really got used to the way that marketing had always been done. But things have kind of changed now because the people who are able to buy houses, they're people like you or my age.
Yeah.
Well, maybe not so much in LA these days, but
our age group, right?
Our age group, and for everyone out there, like where Jared and I are kind of like the older end of the millennial the millennial spectrum. And a lot has changed because before, like, you would go to your bank, you would, you might have a friend who had a loan officer who got the loan done, worked through a referral. But could you ever see yourself going to if let's say you were thinking about buying a house and you need to get financing, would you walk into
I don't go to the bank to get cash.
I know,
I don't even want to go to the ATM.
Exactly. Which is the mindset of a lot of folks now who are able to
I can't
buy
remember
homes.
the last time I wrote a check.
Right.
Even for like rent or anything, no one takes checks anymore.
Right. So like what happens now is with most millennials, they're starting their research process. And I'm not even going to say millennials anymore. I'll just say people in general now.
Yeah.
They start their research process online.
Right.
What is a mortgage about? Like how much of a mortgage do I need? Like how much down payment do I need? Those are like some very typical search terms that you might send into Google.
Yeah. How much can I afford?
How much can I afford? What is a mortgage? Right?
That's me. Guilty.
What kind of loan programs are out there? What's the difference between a 30-year mortgage and a 15-year mortgage? And what's the advantage? What's an ARM, right? Which is the type of loan program, adjustable rate mortgage. So
first-time home buyers,
right? So what I've noticed though, probably over the past, 5 to 10 years is that as people have started to gravitate online and do the research online, there's been the mortgage companies and mortgage bankers haven't done a very good job of adjusting to that shift in consumer behavior to going online.
Part of it, and sorry to interrupt, but half of the industry is there, right? With real estate itself being a very online-driven business, things with Zillow, Redfin, you can almost go through all of that just going online with your realtor. You don't even need to be in the location. You can do everything, via the internet. But then when you get to this later half of the stage,
financing,
the financing part, it's not there, right?
Can you think of is there any mortgage company that comes to mind that may be the equivalent of Zillow or Redfin or?
I guess Quicken would probably be, right?
Exactly.
The first one to this new version.
Quite frankly, there's another company out there called Better Mortgage that does a similar sort of thing. There's another company called Loan Depot as well that does it, but they're not household names like Quicken.
Well, Quicken, I think, does a really good job. I mean, the name alone doesn't sound scary.
Sure.
When I hear
Quicken,
Better Mortgage, that's already terrifying.
Right. The word mortgage.
The word mortgage
the word mortgage being in there.
Yeah.
Right? Yeah. Well, the reason
Thanks, Monopoly.
The reason I brought up that or asked you that question was because it's interesting because Quicken has done a really good job of trying to build an online brand. And for someone who hasn't even purchased the home before, the name.
Yep.
Do you want Rocket Mortgages?
I do. Yep.
So you've heard it before, right? You may not know exactly what it means or what it does, but you know that there's
they were smart. Putting Rocket in front of mortgage definitely makes it less scary and more cool.
And it's like an animated graphic. It's kind of fun.
It's a lot cooler.
So Quicken started a blog called the Zing blog. It's literally
Zing.
Yeah, Zing with an exclamation mark at the end.
Oh, cool.
And when you go on their blog, there's obviously typical BS about mortgage.
Sure.
And,
the 101s.
The 101 stuff. But there's a ton of information on there about home improvement. I even saw a post on there about how to optimize your house for Airbnb rentals.
Wow.
And for the outsider, you might be like, why the hell is Quicken putting all this random content about 5 different paint colors you can choose, or what's the best paint color to choose for your renovation? But the idea is that they want relevant content that's relevant to homeowners.
Yep.
So it's like they become the helpful brand in your whole entire home ownership experience, right? Whether it's you're about to buy a house or whether you've already purchased the house, right?
Or refinancing.
But that's
remodeling.
The thing. So if you're into remodeling your home, you probably own a home.
Right.
If you own a home, refinancing your home is and for those out there who don't know, refinancing is basically the act of like lowering your interest rate, for example.
Finding a new lender, basically.
Finding a new lender or working with the same lender to get a better deal on your mortgage, So refinancing is something that's targeted towards homeowners. And like, so you make the connection. It's like, okay, home improvement tips, Airbnb, the people who are on there are probably already homeowners. And
the Airbnb angle is smart because there's a ton of people out there just trying to buy property to make Airbnbs.
And there's special types of loans that their interest rates are a little bit higher, but they're just for investment properties, period. Harder to qualify for those loans. But the idea there is that if you go on the Zing blog, you'll notice that they have a email subscription thing on every single page of that site. And they have an email list of over 300,000 people.
Wow.
Right? So just imagine like when interest rates drop. Let's say they drop 0.5%. You send a communication out. And
Not Bing, Zing.
Yeah. Zing, exactly. And all of a sudden, you just tapped into a huge source, and they probably have insane data on all those people, which says like, okay, like I can make my email marketing hyper localized and hyper smart to say, okay, like, hey, interest rates just dropped 0.5%. At your current mortgage and your current rate, this would lower your monthly payment by $300 or $400. Well, F yeah, dude, I'm going to reach out to you guys and sign me up, right? So again, that's just another example of how Quicken has just eaten everybody's lunch right now in terms of digital marketing. And I think a lot of lenders out there are, there's a kind of a trend going on right now with the margins on loans, becoming a lot less. And what's happening now is that too much of that margin is either getting paid because you're paying the loan officer to generate leads for yourself. But as a mortgage company, if you can generate your own leads and feed them to your loan officers, you could potentially pay your loan officers less because you're giving them the lead.
Right.
So the reason, this is a really roundabout way of saying a big reason why I wanted us to focus on the mortgage vertical specifically is because I see a huge opportunity for forward-thinking mortgage companies out there who want to make an investment. And believe me, it is an investment to build a strategy like Quicken Loans has done. It takes at least 4 to 6 months to start generating leads from something like that. But I think I wanted to build an agency that used technology, content, social media, email marketing, all the tools that we always talk about as part of a really coherent digital marketing strategy to help some of these mortgage companies who are forward thinking, find a way to build sort of that Quicken Loans model for themselves.
Right.
So,
yeah, I mean, I think we both agreed that industry in general just needs some refreshments, some refreshing all around. So I think that's kind of, it attracted you to it because of the marketing tactics that you can now build for it. To me, it was like, we could storytell around.
Let's do the Geico thing for the mortgage industry.
The Dollar Shave Club thing an old industry, right? The Dollar Shave Club idea is the perfect example because it was a really antiquated industry that had been around and it was just doing its thing. And, everybody just kind of buys, $20 packs of razors, or it's cheaper to buy the new razor or whatever. Dollar Shave Club came around and was like, no, let's blow up this whole thing and kind of, recreate the industry basically.
Just like everyone has a razor, or pretty like a large percentage of the population needs a razor, right? The mortgage market is a $1.5 trillion industry.
Yeah.
Right. So it's a huge industry that is just, I feel like it's ripe for disruption.
Yep.
And not to say, and I would say the mortgage industry is very technology focused. It always has been. They've always, like on the production and on that side, they've always been trying to find a way to push the envelope of the paperless mortgage and digital mortgage. But for some reason, when it comes to marketing, they sort of fallen behind.
So tell us some of the new players that are happening in the marketing section. Specifically that you've kind of been doing research on
Yeah, so I won't talk too much about just companies that do marketing, but I'll talk more about companies that maybe fulfill a certain service within the mortgage process.
Yeah, sorry. Didn't mean to point it directly to marketing.
Yeah, because quite frankly, I actually don't, there's not a lot of mortgage companies that are doing marketing really. And if you check out our blog, in fact, we give a couple examples of some companies that do online marketing. But one area that is really interesting in terms of technology is homeowners insurance. And
going back to the Geico ad.
Yeah, exactly. Right. And it's actually a very it's a very cumbersome process because you need to get homeowners insurance if you're purchasing a home. The lender is going to be like, dude, there's no way I'm going to lend you this money.
Yeah, it's like driving off the lot without car insurance.
Exactly.
You can't do that. Yeah.
Same thing, right? So, but it's
a little bit more risky, but yeah.
But even for you getting car insurance, like you got to call
right.
the agent, you got to give them the VIN number, you got to do all this stuff, right? So full disclosure, the company I'm talking about is a client of ours, but there's a company out there called Matic, M-A-T-I-C, and they've built a pretty cool, they're an insurance agency, which means that they go out and they find the best carrier, whether it's State Farm or Nationwide or whatever. And they built a really cool piece of technology that integrates with the entire loan production process, a lot of the technology and tools that loan processors and funders and underwriters use. And they basically make it super simple for, with the click of a button, for the loan officer or the processor to get a homeowner's insurance quote for their borrower. And the cool thing behind the technology is that they actually go out and they search 12 or more different carriers to basically find you the best possible price at the best policy. And that's literally the equivalent of you picking up the phone and calling Nationwide and being okay, my home is 1,400 square feet. It has a fuse box. It's in a floodplain. You got to tell them all this crap so they can underwrite it. And what Matic does is that they actually built this technology that allows you it automates all of this for you. And it basically is the equivalent of you making 12 phone calls.
Within minutes, right?
Seconds. It goes out. It literally it's an amazing.
That is amazing.
I'm always shocked by it because I see how it works.
There's some health insurance, like Covered California does something similar to that.
Oh, do they really? Okay.
Yeah, so you just go to Covered California, you sign up, and it just populates all these different plans for you.
Yep.
And then it finds the best plan.
Do you have to enter any
You enter in all your basic information first, dump it in, and then it just spits out all these plans.
It's awesome, and the reason it's pretty clever. They call themselves Matic because it's like short for automatic, but what it does is you actually don't even have to enter any of your information. It takes all the information from your loan application, which is exactly some of the information you need to underwrite the insurance policy, right? Or get you a quote on the insurance policy. Takes that information out when you click that button, feeds it through their API, does all the magic behind the scenes.
You're not doing this, right? This is the loan officer that's doing this?
Loan officer's doing it.
So you're not even touching it.
Yeah,
which is
exactly.
Even better.
So as a loan officer, this is one more way that you can provide value to your borrower, because most loan officers are like, hey, by the way, you got to go get homeowners insurance.
Yeah. Well, talk about, you explained this to me in about 30 seconds, but explain how excruciatingly painful that process can be.
It sucks, man. Dude, you're trying to gather documentation, you're gathering pay stubs,
and you have a finite time period.
You got a finite time period to do it because you want to hit the funding deadline, which is your closing deadline for your house. And if any of those things get moved off, it's an enormous hassle. It's not easy, right? And as a loan officer, your job is to provide as much value as absolutely possible to your borrower and to make the process easy for your borrower. And so Matic is actually one part of the greater process, but it's one less thing for your borrower to worry about, right? And Matic actually saves their borrowers, I think, $380-something a year. So you could actually tell your borrower, hey, look, I can shave off, $30-$40 a month on your payment.
Yeah.
Why the hell? And by the way, you don't have to do anything.
Right.
Why the F not?
Right.
You know what I mean?
Right.
So
you're going to get the best rate and value.
Same coverage, same policy, all that kind of stuff. Maybe it's easier for you to switch from State Farm to Nationwide.
Right.
And Matic will take care of all that for you. So, we actually are just helping them launch a blog because their main persona right now and their target are, they work very closely with loan officers and processors. They're kind of one of the initial adopters of the platform. So we're helping them build a blog to help build better relationships, with the personas that they're targeting. So Matic is a cool company. Another cool company is this company called Simple Nexus. So I think they just got a pretty nice Series B funding round. But it basically allows loan officers to become mobile originators. So essentially what it does is it allows you to pull credit. scan docs through your phone, send pre-approvals for mortgages through your phone. And it's really cool because it's just another way that you can it's this idea of a digital mortgage. But if you're on the go, you can basically do it all through your smartphone, which is super cool.
That we're always about that.
Yeah. So again, these are examples of companies that I think, like, even though they're not involved on the marketing side of things, they're trying to position themselves to adapt to this marketplace where we as consumers are always doing things on our phones.
Right.
And everything is on the go. Everything should be easy. Everything should be paperless. But these are some cool companies out there that I think are doing some cool things related to the whole digital mortgage. And I think the last kind of cool player, and I've mentioned them before, was Quicken, because Quicken is not a mortgage company, man. They're a technology company.
Right.
Pure and simple. And a lot of people don't have the appreciation for how much work it takes to build something like Rocket Mortgage, because there are so many compliance, so many operations, so many process issues you have to jump through to be able to do that.
Yep.
And, Quicken Loans has really been able to do that. And I think, I talk to a lot of folks like our age, and they're like, I'll name a mortgage company, Quicken, first one that comes to mind,
It's like Xerox back in the day.
For sure. Yeah.
You don't make a photocopy, you make a Xerox.
Yeah,
right?
Exactly.
Yeah.
Exactly. So yeah, I mean, it's an interesting industry, man. And I'm really excited that I hope our goal for this is I want us to be, transformers of the industry and to be partners.
Right. That's kind of the reason why I think we focused on mortgages and just real estate in that general area.
I think more folks of our age are coming to a point now where they have the ability to make these, really important large purchases, and you want to make that whole customer experience as seamless,
painless.
ESPN $4.99.
Yeah.
You know what I mean?
Like the amount of money you're putting into it. Like, I don't want to deal with all that. I've got to think about that. $400,000 loan for 30 years sitting over my head.
Yeah, and it's funny. It's like when I bought my first house, I signed on the papers, and I was like, when you buy a car, right? You're like, oh man, this is awesome. I just want to sit in here and smell this new car smell.
Yeah, totally.
And now it's like when you sign a mortgage, it's totally different. I didn't get that feeling. I'm like, all right, well, I have my own house now, but it's not that different because I already have a house albeit that I'm renting. But I don't know, man. It's a different feeling. Sure. And I think the less friction you can create for people through the process, kind of like companies like Matic and, Simple Nexus, and there's a couple like Blend and Roostify or some other companies that are doing some things like this in the space. But I think the more seamless you can make the experience, the better. And I hope that we, as Tobe Agency, can really get out there and help mortgage companies market themselves. And just a shameless plug, we actually just recorded a webinar this week. It's called Inbound Digital Marketing for Mortgage Professionals. And, it's actually a very nice overview of how mortgage professionals can use a lot of the digital marketing techniques that we are a big proponent of here at Tobe Agency, kind of into a 1 hour kind of presentation with audio and video and all that kind of stuff. So,
yeah, no, it's cool. In that webinar that we're going to put out shortly, it's cool because it shows an industry and individuals that may not think in the way of Nike or Apple or a lot of the companies that we kind of break down and talk about here. It shows them that they can think that way and they can put out content in the same way and just, hyper focus it towards what they do.
Exactly.
It's not an uneven playing field. Everybody has the opportunity to kind of take advantage of the social media platforms, the internet platforms, email platforms, whatever it is, in the same fashion. It's just about how you build the content for that fashion.
And you use that content to build a relationship with your customer.
And that's all it is in the end. That's all it is.
Because you helped me out. It's just simple human psychology. And that's what content marketing in the end is all about. Right? It's, you want to entertain or be educational or helpful.
Yeah.
Right? And
it's giving first.
You got to give first before you ask. So yeah, man, I mean, I'm glad we finally got to talk about this.
Yeah. It's something that, we couldn't talk a lot about stuff like we couldn't announce Matic yet because, we'd been working on a lot of NDA type stuff with them, so I wanted to make sure that we got it in the right time. But no, this is a cool episode, man. I definitely learned a lot. I'm sure the audience pulled out a lot of value. If you have not seen The Big Short, definitely go watch that. It's a great movie cinematically. Yeah. And it's obviously a true story.
Yeah, and Steve Carell is like awesome in that movie.
End to end, it's one of my favorite movies, and it's directed by the same director and creator of like things like Step Brothers. He works a lot with Will Ferrell.
Oh, I didn't know
so
that.
This is like a flip, a different light, different topic.
There is that kind of
but he's got that dark comedy,
dark comedy to it.
It's got some really dark moments in it that are kind of funny, but then you're like, wait a minute, that's not that funny.
Yep.
Yeah, definitely check that out. Well, cool. We will definitely link everything up in the show notes, guys. Thank you for your time. As always, we will be back with another episode, going on episode number 14. It's climbing, man. We're starting to do it, so
we're stoked. And for all of us, everyone who's still on board and listening with us, thanks for all your support. Seeing those plays is actually what gets us to do this. And there's a lot of work that Jared has to do to make sure this thing is in prime condition, to put out there and publish. So hats off to you, Jared.
Thank you. But yeah, that's going to do it for today, guys. We will see you guys on the next one.